Hi and welcome to Day Trading Explained series. Those who started with us at video number 1 remember that we talked about 4, maybe 6 part series. As we evolved into now our 6th video, I think this is a huge mistake. We need to really expand this series, and we'll do it as long as there are demands for various chapters. And I think trying to compress everything into 4 to 6 videos was obviously a mistake. So we'll go along as long as there is demand, and our email is not buzzing. Sorry about that, but there are people that are expressing their interest on more topics, and that's why we're gonna do and basically evolve this series into as many topics as we can cover. And if you have more anything to add, please email us. You have our email. And sorry that we cannot give you our telephone numbers. That's been a huge mistake before, and we won't repeat it. So please bear with us. Just email us or comment, and we'll reply. Okay, if you remember in the last video, which was number 5, we talked about how out of 6,000 stocks to trade, you can pick the ones that are the best for day trading. And what is a stock that's best for day trading? A stock that has many dollars between the highs and the lows. So if a stock is trading on a normal day, a dollar between the highs and the low, let's say it trades between 30 and 31. So the maximum that a day trader can make, assuming it's not going to go up and down 10 times, and it never happens, is $1. You say you buy at the very bottom like 30 and you sell at 31. That hardly ever happens. That's not the concept of day trading. So what do you want? Basically, you want a stock that normally trades between 30 and 31 on a given day to trade between 30 and 35. How is it possible if in a normal day a stock goes between 30 and 31 on another day to trade between 30 and 35? So it can happen. Now let's see an example. This is the chart of Nike, which reported earnings, as you can see, on June 27, which was not such a long time ago, just a week ago. Okay, so what happened in Nike? We're not going to read the financial statement, but we need to observe the price action. So what happened in the price of Nike? You can see that the stock before earnings closed here, let's call it 62, and the next morning it started to trade nearly at 70. So what happened with those $8? This is an $8 move. Okay, so what happened here? That's overnight or pre-market. In this case it was overnight. So Nike reported earnings. The earnings came as per the investors, which are making the decisions to buy or sell Nike, better than expected. They expect to sell more shoes, make more profits. They are not worried that much about Trump's tariffs. We don't care. We're not analysts of shoes, definitely not analysts of Nike. There are plenty of accountants and business analysts and stock analysts that are getting paid millions of dollars per year to analyze Nike and its performance. And the bottom line, the stock gaps up 10%. So Nike, which was worth 62, is now worth 70 before the market opened. Why? Because of that event, which was better than expected earnings. So you see, guys, that already without basically a lot of trading, although there is trading in the aftermarket, in the pre-market, we're going to discuss that. Wow, I have to add this chapter also, pre-after market. We discussed it in a later chapter. So the stock opens up and trades on that particular day, which was June 27, between let's see the numbers together. So it started to trade under 70, hit a high of 74 and closed at 72. So basically from the bottom to the highs, that's $4. Okay, Now if we go back, let's go back a couple of days or weeks, and you can see that there are days when the stock is trading a range of less than $1. Here we have a stock that's trading between highs 62.18 and lows 61.24. So that's $1 on that particular day, June 16. So this is $1, and a couple of days later it's $4, which is 300% more. 300% more is not 5% more. It's a lot more. Now you can see obviously that the volume on that particular day, which was June 27, was 117 million shares, and the volume on the day where nothing happened was 13 million shares. So again, you can see a huge factor of 10 to 1. 10 to 1 is 10 to 1 is 1,000% more. Yeah, it's 1,000% more in terms of percentages. So clearly that event, which was earnings, created a buzz. Many investors, whatever those investors are, and I can show you the shareholders of Nike on the platform, but we don't care about the shareholders, not at this point obviously of the discussion. We want to know, going back to our mission, is which stocks to trade. Now, do we know that earnings are reported, do we know when Nike is reporting earnings? And the answer is yes, definitive. Those reports that are coming out every 3 months for a US listed company are listed months in advance. So I know now that in 2 or 3 weeks or 4 weeks or 8 weeks from now, by the day, which stock reports earnings. And this is one of the factors that we as day traders are following. Meaning we know that a stock is reporting earnings. This stock is very important. Nike is important not only to its investors, but it's important to the overall retail environment. Okay, this is one of the biggest companies in retail. And it's also very important to day traders. Why? It has all the qualities that day traders want from a stock. A lot of volume. You can see traded on that particular day more than 100 million shares. It can develop a range between the highs and the lows. Assuming you bought it at 70, which was possible at that particular day to buy it at 70, which is a round number, and there was a possibility to buy it. And let's say you don't sell it at 74, you sell it at 73 or at 72. You're still making $2 per share, assuming you bought 500 shares on $2, that's $1,000. If you bought 100 shares at $200, if you bought 2,000 shares, you do the math, that's $4,000. Okay, so this is one of the factors that play into our decision making. Which stocks are reporting earnings? We know where this list is being posted. It's all over the media. You can go to Yahoo Finance, you can go to the NASDAQ website. The link that I'm using will be posted in the description below. And this link basically is telling us which stocks are reporting earnings, and you, based on your experience, must decide which stocks to follow. Now, let's say that on a given day, there is one stock that's reporting earnings, and that's Nike. Obviously, you're going to follow Nike, but that's not the case most of the time. During the earnings season, sometimes there are more than 100 stocks reporting every day, and sometimes 300. So what do you do? Okay, basically, you will go first and prefer to trade the stocks that are the most important to the market, like Nvidia, like Apple, like JP Morgan, like Walmart, and you're going to follow those stocks and try to trade them. Now, what is a good indicator that the stock is going to be moving much during the trading day? A good indicator is the gap. Now let's move again and understand the concept. Let's look at the chart and understand the concept of the gap. So this gap, which was in this case $8 or $7, or in this case nearly 10%, represents the strength. This gap represents the strength of the earnings. Having said that, I wish it was as easy as it looks. there are many cases where a stock gaps up, okay, and then investors are telling to themselves, or some of them, or the majority, okay, the stock gapped up 10%, let's take profits. Why do we want to buy it after it already moved up 10%? Let's start taking profits. And the stock, instead of moving over 70, like in this case, can drift back down to 68, maybe 66, and even come back to the original entry. It can happen. So all the scenarios when we are trading are on the table. Normally we want to see the scenario of what we call a gap up and go. Gap up and go is a strength scenario. This is the case here with Nike, and you can see a couple of days later it's now at 70, nearly traded at 77 Friday. Sorry, not Friday, Thursday. Okay, but again, we are day traders. We want to take advantage of this particular trading day. Let me post it to you again. This is the magic day for us, the day that the stock reported earnings, and it traded between 70 and 74. And this is our mission, to take profits, enter at the right place at the right time, stick to the trade, and get as much profits as we can in this move. So this is one of the ways to find, and here we are answering a very important question. How do you find stocks to trade? You look at the stocks that are reporting earnings, you look at the stocks that are gapping up, and I will show you how to do it, which list to look for, and based on the list which is ready for you before the market opens, you can assume that earnings are good and you want to look for one scenario or another. Again, there are no guarantees that either scenarios will happen. It can happen also that the stock gaps up and then doesn't move much throughout the whole trading day. So all the scenarios, you need to really put it deep into your head as a trader, obviously as an investor, definitely as a day trader, that all the scenarios are on the table every day for each stock, all the scenarios. And you need to get prepared for that using what we called in the previous video as the business plan. So we need to apply a business plan. Now let's take a look at the intraday price action on Nike on that particular day. Okay guys, here it is. You can see June 27 at the bottom of the chart. You can see the 70 price sticking out in the first 3 minutes of trading, because this is a 3-minute bar. You can see the lows of the day, 29.73, and you see the price action. So Nike breaks 70, trades as high as 70, almost 73, pulls back to 71, ends up at 74, trades down to 72. So a lot of price action here in this stock, and obviously you can make money buying it at 72. And if you buy it at 72, whereas 72 here, and you sell it at 74, you still make $2 intraday. But what happens if you buy it here at 73, and then the stop drops to $1.50 before it recovers a bit? So timing is, as you can see, everything in day trading. And this is basically the business of the day trader, to analyze the chart and decide where you want to place the trade. But before you analyze the chart and you want to decide where to place the trade, you need to know what type of stocks you want to trade. And in this video we decided, I hope you agree with me, that one of the venues that are supplying us a trade idea is stocks that are reporting earnings. The link to this source which I'm using, which is nasdaq.com/earnings, will be in the description below. Okay guys, I hope it was illuminating enough. We'll see you in our next video. Please like, subscribe, and share this video with your friends. Thank you.